Hello, good evening, and welcome. I'm Mamta Rawat from the Corporate Communications team, and on behalf of CareEdge, I welcome you to our discussion today on Indian Home Textile Industry Weaving Success. We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today. Mr. Ankit Madhwani, CFO at Faze 3 Limited. Mr. K. Muralidharan, CFO at Indo Industries Limited. Mr. Sanjay Gupta, CFO at Welspun Living Limited. This session will be moderated by Mr. Pulkit Agarwal, Director at CareEdge Ratings. We will commence the session with a presentation by Ms. Arti Roy. She is Associate Director and Group Head at CareEdge Ratings, with over 14 years of industry experience in corporate credit ratings across multiple sectors. This will be followed by a panel discussion and Q&A session. In case of queries, participants are requested to key in your panel. We will take up your queries during the panel discussion session. Now, may I invite Ms. Arti Roy to make her presentation.
Thank you, Mamta, for the quick introduction. Good evening, everyone. I once again welcome our elite panel members who have joined us here today. The Indian home textile industry faced significant challenges in FY23, primarily due to the decline in demand from the key market, that was US and UK, which constitute approximately 68 to 70% of the total home textile imports. After a strong performance in FY22, Indian home textile industry recorded a double-digit degrowth in FY23. And this decline was account of lower imports from US, which was grappling with the inflationary trend and high inventory levels. Further, it was dented by the high raw material and the logistic cost. Following the setbacks of FY23, the industry is now on a recovery path that we have seen in FY24. And looking ahead, it is expected that it will continue to grow at 8 to 10% in FY25. With the recovery in home textile exports, as the US and UK markets have opened up now, along with the implementation of strategic initiatives that Government of India has been taking to strengthen international relations through FTAs and strongly promoting India's textile sector, the industry is poised for a decent growth in this fiscal. Some of the growth drivers, such as rising per capita income, rapid urbanization, and expanding real estate sector, along with the heightened awareness of hygiene and shifting consumer preference, are expected to contribute to this revenue growth. After peaking in June 2022, raw material prices have started stabilizing. However, freight cost remains volatile due to the ongoing geopolitical tensions and escalating issues in the Red Sea. While these factors may constrain operating margins, the Indian home textile industry has identified new inward diversification strategies that are anticipated to help maintain margins in the range of 14 to 15%. We will also highlight the initiatives that the Government of India has been taking, which are crucial for the development of the home textile sector and the industry overall. As a major exporter to US and EU, the Indian government is focused on building relationships and finalizing free trade agreements with other significant economies, including UK. In addition to FTAs, government has also introduced various schemes to promote capital spending by private players, which will indirectly enhance the competitive position of Indian exporters against rivals in Bangladesh, Pakistan, Vietnam, and some other South Asian countries. Given the strong performance of major home textile players and their plans for capacity expansion, the credit profile of Indian home textile companies is expected to remain robust, supported by strong balance sheet and a significant focus on exports. Before we dive into our detailed discussion, I would like to outline the topics that we will be covering today. So in today's webinar, we will begin with a comprehensive analysis on the global and the Indian home textile industry. Given China's dominant role in the global home textile exports, we will see how India has been recording its growth story and then also dwell into the impact of raw material prices along with some focus on the freight cost. Following this, we will shift our focus on the operating performance of the industry for FY24, along with the annual trends that we have seen in the past, highlighting the major products of home textile exported from India and also identifying the key importers. Moving on, we will also discuss about the overview of the domestic home textile market and the broader textile industry outlook. And after analyzing these industry trends, we will discuss the key initiatives undertaken by the government of India to promote this industry. Finally, we will also identify some of the long-term growth drivers that are likely to play a crucial role in establishing a robust growth trajectory for home textile as the industry weaves a path to success, overcoming the near-term headwinds. To gain insight into home textile market, it's important to first consider the broader textile industry and its various segments. So in the year 2023, the global textile and apparel trade is estimated to have reached almost a total value of USD 937 billion. This marked a CAGR growth of 3% increase from 2017. Now, despite being one of the key exporters, there's a huge potential for India to further expand its market presence in textile sector. However, the industry is currently facing challenges, particularly due to a decline in discretionary income among consumers, largely driven by the global inflationary pressures and disruptions from the geopolitical tensions, which has been impacting the trade. Despite these setbacks, CareEdge expects that the overall textile market will still experience growth, expected to achieve a CAGR growth of about 3.5% until 2030. Segment-wise, home textile has also shown similar growth trend, and it is estimated trade value was about USD 59 billion in 2023 as compared to USD 50 billion in 2017. And it is again expected to grow at a CAGR of a 5.5% up to 2030. Whereas apparel and fabric are expected to grow at a CAGR of 4 to 5%. Globally, home textile constitutes 7 to 8% of aggregate industry size. So as I said earlier, global home textile is expected to grow about a CAGR of 5.5%. Now, this growth is expected to be driven by several factors, including increased spending on hygiene, a rising demand for the sustainable products, higher per capita income, and also the booming real estate sector. If we look at the product-wise breakup over here, the major contributors are the bed kitchen linen, followed by carpet and the other textiles. While linen has grown at a CAGR of 2.7% from 2019 to 2023, carpet and floor coverings have grown at a mere 1.2%. Blankets and rugs have recorded the highest growth, that was a CAGR of 3.75%. So we can understand from this data that there has been more focus, more higher emphasis on hygiene, which has driven the demand in these segments. Next, if we see over here, let's examine the evolving dynamics of the global export and imports. So the chart in the upper half of the presentation highlights the major exporter and importers in the home textile sector. China has solidified its position as the leading exporter, with approx USD 21 billion exports in 2023. Turkey follows the second place, while India ranks third. Notably, during COVID-19 pandemic, India's exports surged to USD 5 billion, driven by the heightened demand from US and Europe due to the hygiene concerns and also because of the China plus one factor. Whereas on the import side, as we see, USA stands out as a significant player, accounting for about 35% of the global home textile imports. European countries follow, with Germany, UK, and France importing approx 8%, 6%, and 5% respectively. If you look at the lower half of the slide, it illustrates the primary countries exporting to USA and UK. For USA, China remains the dominant supplier, and it has been around like 35%, while India holds the second spot, which has been about 25-29%. Over the past 5 years, India's exports have grown by 12.3%, whereas exports from China have been declining, which indicates a clear shift from China to India. In the UK market, India faces more competition compared to USA. China leads in UK import as well, contributing 23%, followed closely by Pakistan, which is again at 20%, whereas India merely accounts for 10%. It is estimated that this FTA, the discussion for the FTA with UK, should help India bypassing high tariff barriers and boost exports by offering a price advantage. India's textile and apparel exports stood is almost nearly 29 billion in FY24. Now, India is currently the third largest exporter of textile and apparel globally. To provide some context, India is the Indian textile and apparel industry. It contributes like 2.3% of the nation's GDP and accounts for almost 13 to 14% of the industrial production. Again, it represents 12 to 15% of India's total exports. India overall is a net exporter with respect to the textile and apparel industry, and government aims to achieve USD 100 billion in exports by 2030. That is textile export. Segment-wise, overall apparel seems to be the dominant category, which in terms of revenue, we can see there has been a significant growth and a promising projection for the future. Changing fashion trend along with the change in the designs, innovations, again, expansion in the new geographical markets and the growing e-commerce, supported by the strong marketing by the companies, have been driving this growth in the apparel segment. If you look at the technical textiles, that also constitute a significant portion and is expected to grow at an impressive CAGR of about 9 to 10%. Lastly, if we talk about home textile, it has grown at a CAGR of 7.5% from 2011 to 2024 and is expected to grow at CAGR of 7.5% up to 2030. Now, this sector presents a substantial untapped opportunity for India, as the country currently captures only about 7 to 8% of the global home textile market. On the right side, we have basically shown the pie highlights the major home textile articles, and cotton terry towels dominate this category, with exports totaling approx USD 1.9 billion. Following towels, the other products are bed linens, curtains, and man-made fiber. Now, the Indian textile and apparel industry experienced a remarkable growth in FY22, which we can see from the chart over here, mainly due to the higher focus on health and hygiene led by the fear of COVID-19. And apart from that, China plus one policy and the US ban on Chinese import was supporting us. However, the textile exports began to face significant challenges in FY23. Exports declined by 18% year on year in FY23. This decline occurred despite a reduction in cotton prices, which averaged at around rupees 91,000 per candy in Q1 FY23, and it corrected sharply to about rupees 61,000 in Q1 FY24. The primary reason for the downturn include inflation and economic slowdowns in the major market, that was US, EU, and UK, alongside accumulated inventory from the pandemic, leading Indian exporters to defer orders or negotiate at lower prices. In contrast to the overall textiles challenges, the home textile sector has demonstrated resilience. Now, the Ministry of Textile estimates that India's home textile market is expected to grow at a CAGR of about 7.5% by FY31. And the key factors driving this growth will be the competitive manufacturing cost and the well-organized retail and e-commerce available in India. Apart from that, comprehensive value chain and large expanding domestic market is providing other opportunities, plus supported by the rising per capita income and the booming real estate sector. Now, before we discuss the challenges faced by the industry in FY23, let's take a closer look at the annual historical performance of home textile industry. So the Indian home textile industry, as I mentioned earlier, accounts for 7 to 8% of the global market and ranks among the top suppliers to US. We are renowned for their superior quality. Indian home textile companies have established themselves as leader in both US and UK markets. Carpet, rugs, and furnishing articles represent approx 30 to 32% of the total home textile exports, followed by bed linen and the kitchen table linen. If you look at the table, the chart, from FY16 to FY19, industry has enjoyed a very healthy growth. But it was during onset of COVID-19 that the home textile sector began to thrive. While many industries struggled during COVID, home textile recorded unprecedented growth starting from FY20. And this upward trajectory continued into FY21-22, where the sector was recording double-digit growth. The peak came in FY22 with a dramatic increase of 26% year on year. And this surge was driven by the pandemic-induced demand and the China Plus One strategy. However, after peaking in the second and the third quarters of FY22, the surge in demand from Western countries led to a significant rise in raw material prices, particularly cotton, while freight costs also started escalating due to the prolonged lockdown of the pandemic. Further, inflation in US and the deflationary trends in UK combined with the rising energy cost due to the Russia-Ukraine conflict resulted in decreased discretionary spending in these markets. These factors contributed to a plateau in exports during the third quarter of FY22, followed by a declining trend from Q4 onwards. Home textile exports began to steadily decrease each quarter and recorded a full year degrowth of 12% in FY23. So from a peak of rupees 14,200 crores in Q2 FY22, the exports came down to rupees 11,200 crores in Q4 FY23. As I mentioned earlier, some of the other factors like the raw material prices increase. So over here, we can see in this chart, we have shown the long trend of cotton prices, which is a key material for the home textile sector. As highlighted, the cotton prices peaked almost to 99,000 to 1 lakh per candy during June 2022, which was almost equivalent to 271 to 272 per kg. This significant increase was primarily driven by the low yield cotton crops in several states. And the challenges faced by these crops included the reduced cultivation area, unseasonal rainfall because of the El Nino, and ongoing trade tensions with China, compounded by the US ban on textile sourced from cotton grown in the Xinjiang province of China. However, following this price surge, demand began to weaken and amid a global economic slowdown, leading to a sharp correction in prices starting from December 22. Since then, cotton prices have stabilized and are currently in the range of 164 to 165 per kg. The second most important cost, the freight prices, also saw a similar trend. This is another major expense for home textile, which have historically been characterized by volatility. First and foremost is the influence of oil prices on these, as fuel costs are a major component of shipping expenses. Additionally, tariff and trade agreements significantly impact logistic costs along with the demand-supply dynamics for the trade. Following Russia-Ukraine war, oil prices started surging, and it exceeded almost $110 per barrel in May 2022. This spike, coupled with ongoing issues in the Red Sea, has disrupted the critical shipping routes, adversely affecting the global trade and the supply chains. As the Red Sea crisis continues, Indian exports have faced increasing shipping costs due to the rerouting around Africa. Approx 95% of the vessel have to take a longer route around the Cape of Good Hope, which has extended the transit time by almost 14 to 20 days. And this has resulted into an increase in the logistic cost by 4 to 5 times. The situation remains challenging. It has been impacting the global trade very badly. Now let's briefly discuss the Indian imports and the home textile sector. While India is primarily a net exporter, as I mentioned earlier, there are certain key items that we still import. And as we can see in the chart on the left, India mainly imports carpets and the other floor carpet, with China and Turkey being the main supplier. Now, the domestic carpet industry faces a significant competition, particularly from Turkey. For instance, Panipat in Haryana, it exports approx 3,000 crores worth of carpets. However, carpet manufacturers in Panipat are struggling to maintain their competitiveness in international market, mainly due to Turkey's machine-made carpets, which are sold at prices 25 to 30% lower than the labor-intensive carpets produced in India. So a holistic approach that combines financial support, skill development, and market access will be more effective in supporting this industry and reducing the imports. Country-wise, India imports most of the home textiles from Bangladesh, China, and Turkey. Now let's shift our focus to the impact on major companies within home textile industry, which constitute 65% of the market share and their financial performance, which provides a clear picture of the overall landscape for Indian players. As previously mentioned, manufacturers experienced a significant growth in FY22 when the top line increased by over 37% year on year. This growth was primarily driven by the higher exports to major markets as well as increased realization prices for home textile articles. The top right side of the slide, this chart also exhibits the yearly trend of operating margins. And again, you can very clearly see that it was almost 17%, the peak in FY22. However, following FY22, industry encountered the substantial decline in total sales, largely due to diminished demand from Western economies as US faced inflationary pressures and UK dealt with the deflationary challenges. This reduced demand combined with the rising cotton prices and elevated freight cost, along with the inventory write-off, resulted into decline in the margins. Almost 490 basis point of operating margins decline was recorded. Looking at the bottom right side of the slide, we have shown the gradual decline in quarterly sales figure, with operating margins almost bottoming out to 9% in Q2 FY23. That was exactly 1 year after reaching their peak in Q2 FY22. Despite this downturn, the industry has shown recovery post Q2 FY23, driven by the increasing domestic demand and the gradual recovery in exports. Despite the decline in operating performance during FY23, the industry's balance sheet or the leverage continued to remain strong. The debt coverage metrics remained robust. So we can see very clearly that over the last 5 years, there has been a significant deleveraging, which has resulted into a very healthy, strong gearing ratio, which has been about 0.6 to 0.7 times for the last 2 years. And similarly, we can see that the interest coverage ratio has also improved and has remained at healthy levels, despite the marginal drop we saw in FY23 because of the profitability. But again, in FY24, it has recovered. Looking at the working capital trend, the sector remains highly working capital intensive and it is expected to remain at a similar level. Also, we can see that despite the sharp decline in sales and demand during FY23, the inventory days remained elevated. Now, this indicates that the industry continued to struggle to reduce their inventory levels. Again, in FY24, now exports have revived, demand has revived. So again, the inventory levels are expecting to, it has remained higher only. Now, to support the recovery of textile industry and export as a whole, the government of India has taken some initiative. Let's take a quick look at that. So India is targeting USD 100 billion in textile exports by 2030, supported by a new foreign trade policy launched in March 23. Now, this policy shifts from an incentive-based approach to a remission-based framework, providing various incentives to the exporters. And this includes the EPCG scheme, which allows the import of capital goods at 0% custom duty rate. And this will help home textile industry to upgrade their infrastructure, enhance productivity, and compete effectively in international markets. Next, the PM Mitra scheme enhances the industry by enabling importers to establish manufacturing plants within the Mitra parks. Now, these parks facilitate the creation of an integrated value chain, which will help in reducing the overall logistic cost. Additionally, the PLI 2.0 scheme, it offers around rupees 4,300 crores in incentives aimed at bolstering India's manufacturing capabilities. Notably, the new scheme has lowered the minimum investment threshold from rupees 300 crores to rupees 100 crore, which has enabled higher participation from the industry. And these impact can be seen, the impact of these incentives very clearly reflected from the chart we have shown, the increasing investment in the textile sector, which we can see on the left side. Now, one of the most effective ways to boost export is through the FTAs, the free trade agreements with importing countries. FTAs encourage businesses in member nations to concentrate or producing and selling goods that optimally utilize their resources. Additionally, FTAs reduce trade barriers, which can significantly benefit the small and medium sized enterprises looking to export. Over the years, India has established numerous agreements with neighboring countries, which has resulted in notable increase in exports. A standout example is the SAFTA agreement, which has led to almost 2.5 times increase in exports to those countries. Similarly, agreement with Australia is aimed at reducing or eliminating the trade barriers. Most recently, in March 2024, India has also signed an FTA with other four non-EU nations. Now, this agreement is again anticipated to attract almost USD 100 billion in investments to India. Additionally, discussions are ongoing regarding an FTA with the UK, which has always nearly been discussed for last 2 years. Now, this bilateral trade agreement is expected to be finalized soon, and we're expecting that this will again support significantly in growth of the textile exports. Let's see what are the near-term challenges that home textile industry is facing and can hinder the growth. Inflation has been a persistent financial concern in the US now for some time. It leads to reduced discretionary spending among American consumers. And since home textile products are largely considered discretionary items, this could negatively affect the demand. The anticipated recession in the US would indeed pose challenges for the home textile industry. As economic conditions fluctuate, business in this sector need to adapt their strategies to navigate the potential impacts. Similarly, the other markets, the European Union, is grappling with high inflation, primarily driven by the soaring energy cost. And UK has recently emerged from a recession that lasted for last 2-3 quarters, with its economy now growing at a modest rate. In contrast, again, Japan, which is one of the top importers of home textile, has been facing recession from the beginning of 2024. However, there are signs of recovery fueled by stronger wage growth and a weaker yen, which are boosting exports. Another significant challenge is the volatility in the freight cost and the cotton prices. Logistic costs are closely tied to the oil prices, making them inherently unstable. On the raw material front, while the cotton prices have been stabilizing, they have not yet returned to the pre-COVID levels. Any movement upwards can impact the profitability of the industry. Finally, supply chain disruptions stemming from various international and geopolitical issues, such as the crisis in the Red Sea, continue to pose challenges for the industry. Overall, the Indian home textile industry is poised to grow at a healthy CAGR of 3.5% by 2030. As previously noted, home textile products are classified as discretionary item, meaning that an increase in consumer disposable income is likely to boost demand for furnishing and home decor. And this rise in disposable income, along with the mushrooming real estate market in India, is expected to further drive the demand for enhancing home aesthetics. Also, post-COVID, consumers have become more focused on personal hygiene and cleanliness, leading to an increased preference for clean bed linens and more sanitized towels. Now, this shift in consumer behavior towards prioritizing hygiene is positively impacting the growth of the home textile industry. Additionally, a significant trend shaping the home textile market is growing consumer demand for sustainable and eco-friendly products. As awareness of environmental issue expands, more consumers are opting for textiles which are made out of organic materials and those produced through the sustainable process. This shift towards sustainability is expected to play a very crucial role in the industry's evolution. With this, I conclude the presentation here. Over to you, Mamta.
Thank you, Arti. Attendees are now requested to key in their questions, which we will take up during the Q&A session. Now, may I invite Mr. Pulkit Agarwal to take over the session, please? Pulkit Agarwal is a director and ratings head with CareEdge Ratings Limited. He handles large corporate groups in CareEdge Ratings and has an overall experience of more than 18 years in ratings. He is a chartered accountant and holds an MBA in finance. Over to you, Pulkit.
Thank you, Mamta. Good afternoon, all. Now it's time to seek opinion from the experts in the field. Before we start our panel discussion, let me introduce our esteemed guest panel members for today. Our first panel member for today is Mr. Ankit Madhwani. Mr. Ankit is associated with Phase 3 Limited as a Chief Financial Officer. He has a rich experience of over 2 decades and is a qualified chartered accountant. He has held various senior positions in finance with companies such as Whitewater Corporate Advisory Private Limited and ENY. A very warm welcome, Mr. Ankit. Our second panel member for today is Mr. K. Muralidharan. Mr. K. Muralidharan is a finance professional and a qualified company secretary. He is presently the CFO of Indo Industries Limited and takes care of the corporate and financial affairs of the group. He is also a qualified law graduate and an insolvency professional. In his career spanning for more than 35 years, he has worked with various industries like banking, engineering, pharma, textile, and financial services. With IndoCount, he has been associated for last more than 2 decades and has been instrumental in its growth, be it organic or inorganic. A very warm welcome, Mr. Muralidharan.
Thank you.
Our third panel member is Mr. Sanjay Gupta. Mr. Sanjay Gupta is the President Finance and CFO of Welspun Living Limited. Mr. Sanjay has more than 28 years of experience across multi-locational and multi-divisional companies. During his career, he has led strong organizational and profit growth across industries ranging from retail, manufacturing, pharma, healthcare, media, and education. Prior to joining Welspun, he was a board member of Sakal Media Group and Group CFO of Wibgyor School Group. Mr. Sanjay is a qualified chartered accountant and company secretary, having secured top ranks in both the examinations. He is also an MBA from INSEAD, France. A very warm welcome, Mr. Sanjay. Let me start today's discussion with Mr. Sanjay. Mr. Sanjay, after subdued performance by home textile companies in FY23, we have shown a strong rebound in FY24 with growth of around 10%. In your view, is this growth expected to continue over the medium terms? And what would be the drivers going forward for this growth?
Thank you, my panel members. Thank you, Pulkit, and welcome to all the participants. Pulkit, as Arti was saying, India's home textile industry plays a critical role in global markets, supported by a strong raw material base, which is cotton, wide product offerings, and manufacturing capabilities which are robust across the value chain. Financial year 23 proved to be a challenging period for the home textile industry, with limited demand, soaring raw material prices, commodity inflation, and supply side constraints. The macroeconomic disruptions significantly impacted the sector's overall profitability, which we saw in Arti's presentation. However, a positive shift began in Q4 financial year 23, which saw a decline in raw material and commodity prices, though at a higher level, easing of supply side challenges, and a notable peak in the demand. Global home textile will see a 6% CAGR growth till calendar year 28, which is currently at USD 126 billion. It will grow at a 6% CAGR till 28, which, as Arti said, is because of increased spend on hygiene, rising demand for sustainable product, high per capita income, and mushrooming retail industry. Now, one aspect that I wanted to discuss was, USA, which is the second largest importer of home textile globally and enjoying 31% of the total global trade. So China +1 and ban on Xinjiang cotton have been advantageous for India, propelling India's share in the US import of cotton sheets from 50% in 2019 to 59% in 23, and is nearly at 64% currently till date. Territal from 39% in 2019 to 44%. And China at the same time has been losing its market share in the US by 5% in towel and sheets. Indian players are also focusing now on top of bed category, which was hitherto dominated by China. And we can see that India's share has grown from 20 to 22% last 2 years, while China has degrown from 48% to 40% in the last 2 years. So the environment seems to be currently conducive for Indian home textile players to continue at the grow at a higher rate than the other players in the medium term. What do we expect in shorter term is, lower inflation will boost demand revival, as Arti had mentioned. The China Plus One strategy, it will continue to help the Indian players. The geopolitical tension may, however, impact industry revival. Hence, we are cautiously optimistic of the growth in the near term. But for the medium term, I don't think that it seems to be a problem.
Okay. So somewhere what we are seeing that China Plus One is playing out for the home textile companies.
Correct.
So with this, let me get Mr. Murli in the discussion. So this China Plus One strategy we have seen playing out for the home textile company, but still, what we have seen that China home textile export in last 5 years have grown at a CRG of roughly around 4%. So do you see that going forward, China can again be a threat to the Indian home textile companies, and that again can start putting pressure on the volumes and margins of the home textile players?
Good afternoon to the participants. Thank you for the opportunity. See, Pulkit, one thing we have to understand is that India is a dominant producer of cotton. Cotton-based textiles have been, sort of a strength of India for decades. So, and when we compare with China, China has not been so strong in cotton. Other than cotton, yes, they have been strong. Now, basically, so displacing China or, easing out China from their position is going to be difficult because, but gradually we have seen that, India is developing its strengths and trying to challenge China and others. And your graph shows that China has been losing out in terms of market. Now, the main success of Indian companies has been that they have been consistently performing in the sense that the exports have been sustainable. The economy has been good. There is a stable political setup here. With all this, and infrastructure has been developing very well. So with all this, I think India is now, apart from the strength of cotton producing country itself, and the qualified labor we have, India has shown its the strength in the international markets, especially in US, where India's dominance is seen as Sanjay was saying that the imports into US of Indian cotton products especially has been growing. So it's a reciprocation. It is the country has been consistently exporting. Supply chain from India to US has been good, and we are dependable that way as one of the suppliers of textile products. So all in all, I think as we India and Indian industries put up their mark, definitely I think we get noticed, and gradually the China Plus One in the long term will definitely play out.
Okay, so basically India has adequate raw material availability and skilled labor to take care of any challenges which can come in future from other countries.
Also, you have to understand also that we have a good engineering setup in Indian textile machinery industry is also good. So all in all, I think it's everything is looks positive, except okay, the inflation in many of these overseas markets which we are seeing. That's also because of the action taken by the central banks, is likely to cool down. So we are, I think, seeing the end of all those inflationary pressures. Maybe we are very optimistic that things should perk up from here.
Okay, okay, got it. Let me come to Ankit. Ankit, during FY23, we have seen home textile industry witnessed major inventory destocking globally. In your view, was this a one-time event, and is the industry prepared for similar type of future events?
So, first of all, great presentation by your team, and good evening to all the panelists. So, yeah, Pulkit, I think FY22, all of us kind of shipped material for say 13 months or 13 and a half months in place of 12 months. Now, the reason for that is during FY22, somewhere in the middle of the year, the shipping times got extended from a normal of 45 days to 90 to 120 days. And, that stretch ensured that somewhere in October, November of FY22, the customers preponed the orders, budgeting for a wider shipping time and also a wider clearance time. So FY22 was, the growth, the exponential growth that your presentation showed was basically that, coupled with a lot of inflation that came in, initially in the cotton prices and, shipping costs and various other things. So each one of us, would be in the phase of kind of increasing our prices, which are beyond bearable. So FY22 was full of that. But obviously, it was a one-off year in my view. FY23 was a correction. So say we would have supplied 11 months worth of material because obviously that correction happened
Mm.
and the shipping times again came back to normal from an average of 100 days to 45, 60 or 45, 50 days. And FY24, you had a situation where cotton prices obviously completely came back to normal, though higher from COVID, but obviously in line with the increase in MSPs over the years. So that was the picture, which was there, which you experienced. However, I'd like to bring one point which is very crucial from a global home textile perspective. So, in India, we are already a leaders, and so to say, we have a gold medal in cotton home textiles and cotton-related home textiles. However, the global textile industry, be it apparel, be it any other segment, 70% of that has moved towards polyester as a basic raw material. 25 years back in the year 2000, it was 70% cotton. And in over the last 2.5 decades, China has completely, turned each and every product category, and that's where their market share is basically. So,
Mm.
the China plus one theme that we talk about, and you mentioned that China is still growing at CAGR 4%. I think a lion's share of that is coming from polyester, where India as a country is yet uncompetitive. I'm being very clear on that word. The reason being that wherever a basic raw material is, India has a large polyester yarn market, wherein we produce a lot of yarns, likes of Alok Industries, Filatex, Bilosa. I have a lot of guys who produce yarns. We produce a lot of good quality yarn, but we export all the yarn because the like in cotton, where you produce yarn and you have sheets, towels, and everything else being produced in India, and then the final product is exported directly to the retailer. In polyester, we are far, far behind. And in fact, that is the reason the PLI scheme launched in 2020 was titled as PLI scheme for man-made fibers. And obviously, the government is relooking at that, as you also have highlighted at your presentation, to ensure. So in the polyester arena, we are far, far behind China, which is why I would say that China plus one has not taken off the way it was expected to take off in 2020. Is that an
Yeah.
alarm to pause? Yeah.
So basically, India has a lot of scope in polyester home textile.
Exactly. Now, do I have a minute or am
Yeah,
I
yeah, yeah.
clear?
Please continue. Please continue.
Okay. Yeah. So, in polyester, there is a basic raw material price difference between India and China, purely due to availability locally, number of players supplying polyester, and all the products that we speak about, which was there in Arti's presentation, are globally made in both cotton and polyester. Obviously, some of the carpets and rugs are predominantly polyester driven, but there the competitiveness is yet to be achieved fully by India. So on the raw material front, we have a big disadvantage as we speak. Obviously, that requires a separate webinar to discuss only the polyester raw material difference. My esteemed panelists here know what I mean. So basically, that is one. Apart from that, all other disadvantages are common, which is labor, electricity cost, gas cost, and every other costs which are differentiated. Last but not the least, your tariff barriers. Obviously, if we get some advantage there compared to China, it'll be great. And also your currency. Post-COVID, post 2022, the Chinese yuan went from 630 level to 730. That's a 15% depreciation of the Chinese yuan. Obviously, it was in line with the Japanese yen for China to match that. However, the Indian rupee only depreciated about 8 to 9% from 75, 76 to 80 to 83. Now, this is the first time in last, let's say, 30, 35 year history, which is the liberal, once we became liberal, wherein, our currency was relatively stronger as compared to the emerging markets, including China. Now, in an industry like us, where obviously in textile as a whole, apparels may not have got that affected. Obviously, we know Bangladesh has become a larger market share there, but in a small, tight industry like home textile, even a 5% disadvantage there makes a big difference. So I would say that, it's a mix of all these factors. But yeah, polyester, home textile, so cotton, obviously, as a company, we obviously have equal share of both in our company. But as a country, we are already far ahead in cotton, and that position is cotton home textiles position is in top, like it's indefeatable because we are in a phenomenal position there. But the attention needs to be given to the polyester home textile section. That would be my 2 cents.
Right, 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 right. So, just Mr. Sanjay, just now coming to the domestic market, what we have seen, many of the home textile companies have launched their own brands in the domestic market. In your view, domestic market offers large growth opportunities for home textile players?
Thank you, Pulkit. Interesting question. So, Pulkit, Ministry of Textile has estimated India's home textile market, which includes home textile plus technical textile at about 10 billion US dollar, which is poised to grow at between 7 to 10% CAGR over next 5 years. So as Arti had mentioned, the factors driving this growth are, competitive manufacturing costs of Indian manufacturers, presence of entire value chain and a large and growing domestic market, increasing focus on technical textile due to, growth of end user industries and rising per capita income and an, ever expanding real estate industry in India. On the other hand, the macroeconomic factor, we see India continuing to outshine with GDP growth rate of plus 7%, which we saw last quarter and quarter 4 as well. And inflation is at a 5%, which is being maintained. And side by side, we have seen in the last decade or so, the formalization of the economy happening, with the GST, the UPI, which is, making business transactions very fluid. Plus, the number of taxpayers are growing. The tax payment by the individuals is increasing day by day. The number of home buyers is expected to grow in excess of 15% over next 5 years. Investment in infrastructure by the government has been going up quite a lot, which we saw even in the budget this time. We have the largest internet connectivity in the world. Till last year, we were seeing that for 2, 3 years, the tier 2, tier 3 markets are going better than the urban markets. So all this is helping the Indian businesses to grow, and more so in the home textile, because the unorganized sector is quite large in the home textile, with about 70% share. Uh, so I think the brands by the organized player can benefit them with harping on product benefits like hygiene, health, sleep, comfort, value pricing, and so on. So because of the COVID and because of the rising income, people are becoming more and more conscious of these factors. From urban India, as I said, this transition is taking place in tier 2, tier 3 cities, where people are looking at value add and benefits provided by brands and at a sweet pricing. So, home textile as well as technical textile organized players are, expected to play a larger role in future growth in India. And, if the total industry is going at 10%, the uh, India home textile business can grow at in excess of 13-14% over the next 5 years.
Okay. So we are basically seeing a shift from unorganized to organized segment in home textiles.
Correct.
Okay. Coming to Mr. Moldy. Mr. Moldy, we have seen the capacity utilizations of home textile companies somewhere in the range of 70 to 80%. And with the expected home textile market expected to grow at a CAGR of around 6% by 2030, are we expecting a huge capex in the Indian Indian home textile players to increase their capacities going forward?
Yeah, I think the industry is not operating to the full capacity because the recessionary trend prevailing overseas. Uh, uh, Indians have been adding the capacities whenever required to meet the market demands in any case. It's not that the investment is not happening in the industry, but what has put a break in the investment process is also uh, is the issue that the inflation trends, how long it will continue is not known, especially now that we see some green shoots coming up. There is a talk about rate cuts happening in US. I think other major economies also will follow those line. There is a definitely a demand pickup which is likely to happen. So we also expect the Indian industry's capacity to move up substantially over a period of time. So I feel we are at the low end of the this one now cycle now. I think from here, as the inflation cools down, as I was saying, maybe that the upward cycle comes up. The industry also would in the capacity in the industries will also improve going forward, and also investments would happen if there is a need, because I think the cycle in textiles is fairly long, around 3-4 years. So we will probably see some investments from the industry happening also.
So basically, whatever expansion will happen will be a gradual expansion, and it will depend on as and when the demand comes up from the export markets.
I also say that because we are seeing see that the inflation is cooling down, and this is a start of an upward cycle. So upward cycle in textiles normally is pretty long, 3 to 4 years. So for next 3-4 years, I think you will see a rise happening both in capacities as well as investments.
Okay, got it, got it. Uh, Coming to Ankit, ESG is a buzzword currently for across the industries, and home textile is no exception. So, how do you see the ESG adoption in the home textile industries, and how the industry is prepared to take these practices forward?
Yeah, I think the the torchbearers of the home textile industry in India, which are large companies, the three panel companies here. I think all of us have obviously embarked onto the journey of ESG and quite significantly integrated ESG into our operations. Whether it be renewable energy, whether it be equal opportunity hiring, or whether it be governance structures being listed. There's obviously a lot of governance in place. So I think a lot of initiative needs to still happen. Apart from just renewable energy, I think replacement of coal into our raw material is going to be a big change going forward. Reduction in consumption of water, because these are the large contributors, on the environment front. On the social front, by and large, everything is already done. At the scale of our company. But yeah, other than the top 10 companies, I would say still a long way remains for the sector to catch up to ESG. But yeah, there's a lot of scope on all fronts, whether it's energy, whether it's fuel, whether it's formalization of the supply side of our sector. A lot of scope remains on the ESG front.
Okay, great, Ankit. So we'll pause the moderated panel discussion and we'll take up the question from the participants. I would request attendees to please key in their questions. So there are multiple questions, and one question few of the attendees have asked is on the Bangladesh crisis. How does it impact the home textile industry? So, Mr. Sanjay, will you like to take this question? What will the impact of Bangladesh crisis?
Sure.
Yeah.
So Bangladesh, we know, is a large player in textile industry, mainly in the apparel. The globally 7.5% of the apparel is made by Bangladesh only. 45 billion US dollar is the size. And while in home textile industry, Bangladesh is not very large. It's very small. So on the home textile front, there is no cause to concern or anything benefiting us as a home textile player. However, what's happening is Bangladesh used to buy a lot of their yarn from India, and that yarn, so there are various manufacturers who supply, and they will not be able to supply, and there will be an excess supply created in India market. Hence, the prices on yarn can be a impact. In the shorter run, however, the manufacturers will shut down their capacities or not make it, rather than selling at a discount or at a loss. But in the short term, you may see a reduction in the price of yarn. So other than that, there is not much impact on the home textile industry.
Okay. Mr. Mully, if you can take this next question, it's in terms of segment-wise growth. Like it says, India is already a leader for bed sheets and terry towels. Will the growth be led by these categories only, or we see any other products which will be driving the growth?
I think the emphasis, besides this, the emphasis of the government is on the man-made fibers and technical textiles. So, and government is going all out to, promote this. There have been a lot of investments being talked about in the PLI 1 scheme. PLI 2 scheme is, likely to be also expanded to, garments, and maybe we are still waiting as a lobby, industry lobby. We have also, put our suggestion saying that even the, made-up should be included as part of this, PLI 2. If the government accedes to that, I think there is a focus of the government to promote promote these textiles other than only the sheets and towels. Because there will be a lot of employment generated here. So I think the focus of the government is going to be on the other products also.
Okay. Uh, Next question, Ankit, if you can take it's a pretty interesting question actually. In specialty chemicals, we have seen that China is increasing its market share by reducing prices. Does similar risk also exist for the home textile industry?
I think the answer is fairly simple. In case of home textile, you have two basic raw materials, right? Cotton and polyester. Cotton prices are fairly, known globally. In polyester, I did mention it earlier in my discussion that there is a delta. Like if a polyester price is 100, say polyester yarn in India landed to your factory is 100, in China you may get it for 86, 87, purely because of the volume and other factors which are different. To that extent, they have an advantage. Other than that, the manpower, energy cost, electricity cost, and finance cost and all other things, it's not like replaceable. Also, in terms of capacity, the delta of capacity is not so huge as the delta of capacity in that sector. So that kind of thing cannot happen. If it were to happen, it would have already happened in the last couple of years. Where we have seen India growing at a faster rate, India's home textile sector growing at a faster rate than China. So such a thing cannot happen in this sector.
Okay.
Yeah.
Uh, Mr. Sanjay, this question, this would be the last question we'll take before we close this webinar. So there are some data points which points to that US might get into a recessionary situation. So are we seeing any signs of a slowdown in terms of orders from the US market?
So let me give you some pointer of the US market. So the 2024 forecast for the US retail growth is in line with the 10-year pre-pandemic average annual sales growth, which is 3.6%. So the resiliency of the consumers continue to power the American economy. And we are confident there will be a moderate but steady growth through in the shorter run and as well as the medium. Now, we have seen that, navigating the supply chain disruptions had been a big challenge for retailers for what happened in 21, which was COVID fueled demand, then meeting that demand in 22, overstocking happened, then, and the uh, global economy went into recession. Then they had to reduce their stock, and then 23 uh, uh, 23, they have now come towards a situation where they are right size their inventory position. So if they were holding inventory of 8 to 12 weeks earlier, today they are holding 6 to 8 weeks and making us to hold the balance inventory. So in this situation, we don't see that US economy may get into a recession. There have been talks since last 1.5 years, and it has not happened. But the point crops up. We are cautiously optimistic, but we are seeing sustained demand for the same.
Okay. So current inventory levels basically will be a kind of new normals with the US retailers, you
It is
say.
the right size inventory. So most of the industry in home which have home textile have done it, except furniture, home furnishing, electric and appliances, which are still lagging behind from the pre-pandemic level. But most of the other retailers have gone to the pre-pandemic levels.
Okay. Okay. Thank you, Mr. Sanjay, Mr. Muralidharan, and Ankit for your views. It was a privilege to host you all. I will now hand over to Mamta to give closing remarks.
Thank you, Pulkit, for moderating this session, and Arti for your presentation. Once again, thanking all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestions, please write to us in the feedback mail. Goodbye for now. Request the tech team to kindly log off.